Welcome to the podcast, Alex. How are you?
Hey, good. Thanks for having me.
Of course. I'd like to start off the episode. Just tell us a little bit about yourself, your background, and a little bit about your career to date.
Yeah, sure. So I'm a co-founder and CEO of Tenet, and my background is I was born and raised in Munich, Germany, and then came to the U.S. originally to go to school to Stanford, do my bachelor's there, and then stuck around in the Bay Area for quite some time. Initially working at a few hedge funds, and then actually doing a few startups of my own. And the most recent one being one of the larger Bitcoin mining companies in the US. And the first one actually that started pioneering stabilizing energy grids, specifically in Texas, which then led to Tenet in certain ways because it was more around there's so much innovation going on in this climate economy that really feels like it's about to explode. But what's missing is a financial network that ties it all together and really makes it easy, fast, and cheap for people to adopt these types of products when it comes to EVs or batteries or solar rooftop. And yeah, so here we are, right? It's kind of like a path from finance to energy to climate fintech, and extremely excited about that.
Now, have you always wanted to be a founder? You mentioned working at hedge funds, having some startups. Was the goal eventually you're going to be a founder, whether it be 5 years down the line, 10 years down the line, but eventually being a founder and an entrepreneur is where your kind of passion is?
Yeah, it's certainly always been my objective. Actually, my sophomore year in college, I started a institutionally funded quant fund trading volatility products with two classmates and ran that until my senior year. So that was really my first exposure to doing something your own and kind of, capturing the value of your own creation. And I had some brief stints after college working at hedge funds, but then as of late 2016, I started going on my own journey. And the quote I always like to say is you have to have this combination of arrogance and naivety, because you got to believe that you're better at doing something than others, but you also got to be naive enough to try it.
Yep.
So ultimately, that's kind of what led me to my journey. And I wouldn't trade the experiences for anything else, right? You just learn so much by having this exposure to variance and, all sort of like aspects of starting a company that, well, they just compound, right? Those insights, and you're able to pattern match against those over time and just learn.
Tell us a little bit more about Tenet, and when doing that, how'd you come up with the name Tenet?
Yeah, so has nothing to do with the movie. Incidentally, now we have recently started using code names that are Christopher Nolan movie references. So like Memento, Blue Poppy, all that good stuff. So it's a little bit of after the fact. The name really came about because ultimately it was because of the definition of the word, right? And the definition of the word is along the lines of a belief shared by few, but that will permeate the rest of society. And ultimately, it was important to us that we basically are this sort of like conspiracy, right? Shared amongst the founders and the founding team. And ultimately, if we do well, then other people will buy into that. And specifically around the energy transition and building financial infrastructure for that. And then two, it's a palindrome, it's duosyllabic, it has a couple nice properties that just make it easy to spell and say.
Mhm.
So ultimately that's kind of like the story behind the name. Um, and the company really came about because, I think I had a little bit of an orthogonal insight into how climate and energy markets work because of my last company, understanding the challenges, but also the opportunities of these energy assets becoming programmable interfaces. You can actually build software to integrate them into grids, and then you can create financial transactions that incentivize them stabilizing the grid. And then the next step to that for us was, well, you have this paradigm shift, not just on the consumer side, but also when it comes to climate ecosystem business partners and specifically financial markets. That's really now pivoting towards making renewable ESG climate focused investments. And we're in the business of connecting consumers, capital markets, and business partners. Ultimately, we want to help people save money by going electric or reducing their carbon footprint. We don't say we're going to plant trees if you use our product or any of those feel good mechanisms. We
Mhm.
believe strongly that the next 100 million early adopters, or the early majority of adopters, is only going to embrace those products if they end up saving or making money doing so.
You mentioned the planted trees. I mean, do you think that there's, that has been a negative on some of the climate economy in some of those products that don't necessarily feel as if they're climate focused products? It's like,
Yeah.
hey, here's a climate feel good after the fact of a product. Do you think that that has hurt the overall climate economy build? And do you think that, mechanisms like that give the impression that companies are climate focused when they're truly not?
Yeah, I do think that these appeal to ethics businesses are a little bit short-lived, and they're just more indicative of how early we are. It takes, efforts like the Inflation Reduction Act, or the pivot by institutional investors, or even just technological improvements to actually create these openings for other companies to come in and connect the dots. So it feels natural looking at other cycles. If you're looking at crypto or early fintech, or even sort of, around the first internet companies around 2000, that you also had a bunch of these analogous instances. And it's probably more so just a symptom of where you are in the cycle. And climate really has only been a thing over the last 2 years or so, right? It was basically irrelevant. Nobody really spent time on it. Nobody was investing in it. So now you have this really early percentile of companies that started out just really being targeted towards the early adopters, right? And they're either willing to pay a premium, people that bought a Tesla Roadster in 2013, for example,
Mhm.
or they're so ethically motivated that they don't care about economic incentives. They care more about these sort of feel good aspects. And now you have this next generation of sort of climate 2.0 companies, which I think we're part of, that actually focus on creating financial incentive alignment, which effectively unlocks economic efficiencies that you then ultimately pass on to the different participants. And that's actually how you create economic value. Um, so it's just indicative of where we are in the cycle. And ultimately, some will succeed and others will fizzle out. And the ones that will succeed will likely focus on using that as a wedge into actually capturing more economic value creation.
Is there a potential concern? I was watching, CNBC the other day, and it was, I think, the day that a bunch of state treasurers said that they'd be removing money from from BlackRock due to their quote unquote left wing agenda in terms of
Yeah,
the climate. But is there a concern that, like, it seems like there's this constant push and pull still with the climate,
yeah.
that there's aspects of our society that are not as forward thinking, and there's also regulatory issues related to that depending on the state that you're in. And how does that complicate what you guys are building and ultimately looking to
Mm.
build long term, when you have kind of this push and pull across the various, either legislative or regulatory bodies?
Yeah, I think there's more of a normative meta point to make here, right? If you look at these ESG ratings, for example, which is, for example, the issue with that type of pushback regarding BlackRock and these other investors, is if you look at ESG right now, it's kind of crazy to think that Tesla has a really bad score, but Exxon has a really good score. And the reason why that's the case is that ESG ratings by S&P and these other ratings agencies currently focus on downside risk instead of upside opportunity. So really they measure the wrong thing. And if you measure the wrong thing, you're just not going to be able to
Yeah.
have good outcomes. So part of the mission of companies like us, right? It's not just us. It's a whole sort of generation is focused on flipping or inverting that assumption into something that actually focuses on the positive externalities of doing something about it, instead of just risky behavior, and contextualizing that with the company. So that here, I think, is going to take a little bit of time, and we'll have to just make successful progress on our end as well as for other companies. And ultimately, then that leads to more normative changes in how people think about it, especially on the sort of political level
Mhm.
when it comes to ESG or any of these other sort of even buzzwords, if you will, that frankly currently are just anchored to the wrong outcomes, and they just because of that lead to the wrong results when it comes to policy and other types of mandates.
Bringing it back to more of what you guys are currently doing, I'd like to learn a little bit more about kind of how it works. Are you guys available across all 50 states? If I'm a consumer and I want to take out a loan or refinance through you guys, how does some of that mechanism work, and how do I get started if I'd be interested in it?
Yeah, so we're in approximately 35 states all over the country, and will be entirely nationwide in the foreseeable future.
Okay.
But we are currently in all major states, especially sort of the coastal areas, but we also focus a lot on the Sun Belt and any of those states with high EV penetration. And taking a step back, we founded Tenet because we saw that growth in the climate space, and particularly EV is a very large and fast growing market, but legacy lenders were looking at it the same way that they look at traditional gas cars. And an EV differentiates itself in the sense that it has um, tax credits, and you can utilize those tax credits to um, help people get a down payment, for example, that makes the car more affordable at the point of purchase. You have better residual value. The cars last a lot longer. They have 1/100th the moving parts. They're batteries and computers on wheels with a different type of residual value. And ultimately, you have telematics data that you can capture together with the consumer if they consent to better understand how's the collateral performing. Because traditionally, a Wells Fargo, a US bank has no insight into what's happening with the car after the point of funding.
It's true.
And then the other combination is there's so many of these institutional investors who have absolute mandates to focus on lower or zero carbon emission investments. And EVs is obviously a very attractive opportunity for them to deploy those assets. And they deploy those assets at more favorable terms than if it were non-EV or just a generic investment, which means that for us, connecting consumers with sustainability focused institutional investors creates savings for them in terms of lower rates. So for us, it's really around how do we unlock the value of an EV because of its collateral, depreciation, data, using that to reduce the monthly loan amount, and then also decreasing the APR that somebody would pay because we match them with green and sustainability focused institutional investors that previously had no access to EV only investments.
Gotcha. In terms of that you mentioned the data portion, have you seen or do you see it as a potential impediment at some point in the future? People have become very private with their data. Apple comes out with a new iOS that you can hide your cookie tracking, you can hide your email tracking. When it comes to something like this and the value of what that data produces for the consumer, do you think that people would be more or less willing to share that data after the purchase of a car than maybe
Mhm.
they normally would?
So first and foremost, it's entirely optional. We don't force anybody to share their
Yeah.
data, and it's very important to us that we don't come across as somebody that they wouldn't have confidence in, right? Because ultimately, we're their financial partner, and trust is paramount. The second thing is um, we've designed our dashboard and just philosophically around we want to help people save money at the point of purchase, but we also want to give them positive reinforcement in understanding what's my total cost of ownership once I actually own and start driving the car. And you can measure that both in terms of dollar savings as a function of the better maintenance and better fuel efficiency, but also in terms of CO2 savings, because now that they drive electric instead of a gas car, they're obviously making a big impact on their carbon footprint. And it's really about empowering those users to better understand the impact that they're having and having that positive reinforcement around making that decision. And of course, right, over time, as we scale, the more data we have, we'll be able to offer people even better terms. So they
Mhm.
might qualify in future for better APRs, We're currently exploring first steps around carbon credits that we could pass back to consumers to ultimately create even more dollar savings for them and so forth. All of that is a function of tracking what's the CO2 impact that somebody is having now that they're driving electric. So it's optional. Right now, we only want people to do it if they want to, but it's really geared around, can we actually elevate their experience? Can we help them better understand the dollar and CO2 impact? And hopefully, as we scale, that will be a good opportunity to create even more savings for
Today, do you guys work with various dealers? Is it right now? Is it essentially, you mentioned the institutional investors, kind of a marketplace for consumers
them.
and those investors? Is the dealership, if it's not there today, is it in the plans? Kind of how does
Yeah,
some of the finding of consumers work for you guys?
yeah, totally. So we are basically a consumer platform on the front and a B2B financial marketplace on the back. That's
Got it.
effectively how we operate. And we do work with a ton of dealers around the country and are scaling our dealer side of the business. Effectively, dealers are an important part of the value chain, and that's where a lot of still purchase experiences happen, even for EVs. On the other hand, there's also a new generation of climate native opportunities that were previously irrelevant for an auto loan product. And that could be EV mobility platforms, home installer platforms, utility software providers, sort of the entire new generation around what's the EV experience native to, which is anything touching energy, and integrating that into the grid. So we work with dealers, we work with other traditional auto channels, but we also work with the new surface area, if you will, in the climate space that is also trying to guide EV drivers into adopting those types of products. And for the dealers, the value proposition is our loan product stands out on a monthly amount simply because it's over $200 cheaper than any alternatives. Plus, we've built financial infrastructure that makes it so much easier for dealers to get funded and also just operate. And then on the partner side, we integrate ourselves for B2B2C customer acquisition so that they can have the type of experience to deliver to their consumers. And we offer embedded options to have financing for EVs plus other home electrification products at their point of sale.
Now, is it today? Is it only EV? Is hybrid a part of that, or is it only EV today?
So we do battery and hybrid.
Okay. In terms of the broader market, you have states like New York and California who recently led and said, "Hey, we're gonna I forget the actual terminology, zero emission or
Yeah.
cars 2030 or sometime in the future." Does that change the potential size of the market when announcements come out like that, or do you see it as, hey, the market is what we believe it will be in 15-20 years, and this only gets us there faster? Or do you see those types of announcements as potentially bringing the market up to a higher point?
Yeah. I think there's sort of philosophically speaking, a directional bet that we made, right? Which is home electrification, the energy transition, that's a paradigm shift. And whenever that happens, it's going to be tremendously big. All these events just really pull it forward, right? Also, the Inflation Reduction Act initially was scoped at, I forget the exact number, around $350 billion. Well, now it turns out people are doing more research on it, and it's actually twice the size because these tax credits are uncapped. So, right, all of a sudden it's $800 billion by the government. That's unprecedented. So ultimately, it's more about pulling forward this paradigm shift and making it a reality, right? It was sort of a thesis when we initially started the business, and now it's actually becoming real. And the EV financing market right now for just new purchase volume in terms of loans is roughly 50 to 60 billion dollars this year, and that'll be roughly 240 billion by 2025 and around 500 by 2030. And if we have more of these policy changes, that'll just increase that number because it just pulls forward the sort of terminal market value size. that was previously thought around 2050 and so forth. And the other aspect that I like is if politicians make a statement around net zero by 2050, they're not going to be in office anymore at that point in time, right? They're just making hypothetical statements
Yeah.
that they have no influence on. But if we think about now statements made around 2025 or 2030, people can actually be accountable for that. So it adds significant de-risking to market sizing than if people talk about, well, this market is going to be this big by 2050.
We hear, at least today, we hear a lot about this impending recession or downturn or whatever you want to call it. Does it make the option that you guys are helping to offer even more attractive, considering the mention of $200 cheaper on a monthly payment? And do you see any other, kind of downstream impacts of the potential recession on what you guys are
Mm.
trying to build, and how that might impact your business?
Yeah, totally. First and foremost, people are even more focused now on what's my financial bottom line.
Mhm.
You have exploding energy prices, right? You have inflation, you have all these other things going on. And with your mortgage, the second biggest asset that people mostly own is their car and the
Yeah.
car loan attached. So being able to really make a difference there is important for us, and ultimately where we meet consumer demand. They want to save more money on driving electric. They want to be able to have much cheaper way of getting to and from work or just generally commuting. And ultimately, that's our mission: help people drive electric for less. And then on the more recessionary side, currently from where we think about our demographic that we serve, it's certainly more in the prime space, right? Ultimately, that's where the adoption is currently happening. We have the vision towards doing the full spectrum, and we're already doing first steps towards being able to serve more near prime and subprime customers. But ultimately, it's also a function of how insulated are you, given a possible recessionary 2023,
Mhm.
vis-a-vis the FICO score and just generally the risk profile of the consumers that you serve.
Yeah.
And EVs are interesting, or auto in generally is interesting, because auto loan sector is relatively acyclical. It's a non-discretionary asset class. It performs relatively stably through different credit cycles in comparison to other asset classes. So it's a more favorable entry point for us. And then two, the type of customers that we serve right now are mostly homeowners. They have a very strong affinity for climate and tech. They generally want around 57% of EV drivers have or plan to buy other green home upgrades.
Hmm.
So it's a nice entry point for us into the green home, and ultimately creating final form factors around how is somebody actually electrifying their life. And adoption will take a lot of years, right? And as adoption permeates society and goes down the ranks, we'll be able to also serve those types of profiles.
What's the biggest lesson that you've learned about Tenet since you guys launched?
Let me think about that for a second. There's definitely a lot
No
of
problem.
lessons. Yeah, actually, I think it's, if you're starting an early stage company, velocity is all that matters. Everybody can tell you around, a couple different nice things around incremental testing and taking your time and whatnot. No, you got to be quick about iterating. You got to be hungry. You got to be fast. You got to be aggressive. And nobody's going to give you anything for free. You have to ask or get it yourself. So I think one of the reasons why we've been able to execute very quickly and achieve a lot of milestones in, roughly a year of actually building this company is because that's one of our core values. As a tangent, we spend a lot of time on recruiting. We spend a lot of time on values-based alignment when we find people.
Mhm.
And velocity is one of the top values that we look for, where currently in our team, I think still 50% have been founders or founding members in their prior companies. So ultimately, that's just hard coded in our DNA to have high velocity in how we think about addressing a market, serving customers, iterating on our product, thinking about customer acquisition. And a lot of first time founders are looking for perfectionism when actually you have to incrementally iterate,
Yep.
right? And the frequency of your iteration is really what makes your success compound.
Best piece of advice that you've received thus far since launching Tenet?
Also need a second for that.
No
Also,
problem.
I've received a lot of advice. I'm learning every day. Um, so specifically towards Tenet, and it more broadly applies to all of fintech, is we've made capital markets a core customer focus of ours from day one. A lot of fintechs, particularly consumer financing fintechs, think of capital markets as an afterthought. They really think first around what's the loan product or the financial product that we want to offer consumers.
Yep.
But then they don't realize that, well, unless they're happy to balance sheet it with their equity, they actually have to find some financial partners to take care of
Yeah.
that. And then they figure out, oh, damn, actually, there's no buyers because, well, the economics are screwed up. And that obviously led to the demise of a lot of fintechs over the last few years.
Yep.
So, right from the start, we've had amazing angel investors that have deep experience in capital markets. And they really drilled it into our heads that this is not just something to affect your bottom line, it's actually something that affects your top line. And it's a core customer of yours. And you have to make it a focus from the start to serve them because they help you actually get paid, right? Especially if you're a consumer lending business, you're basically giving money away and then you hope to make it back. And the way you hope to make it back is you kind of arbitrage some risk profile inefficiency that the market hasn't discovered yet. So you can't really do that last half if you don't have access to capital
Mhm.
that ultimately allows you to scale up doing so. So that really has been the number one lesson, and hopefully something that's really paying off, especially now, but also going forward.
You've mentioned those around you at least a couple of times during this episode. Tell us more about the team. How big is it today? What does the team kind of makeup look like? Tell
Mhm.
us more about those around you.
Yeah, absolutely. Would love to do that. We're 21 people now, and we're based in New York, but also remote. So over half of the team is remote, and that could be California, Texas, Florida, Canada, and so forth. Generally, as a culture, we try and spend time together in person, and even the people that are remote try and come into the office every 1 to 2 months. It's very important for us as an early stage company to spend time physically together.
Mhm.
And we have people with deep climate and fintech experience. We have people from Brex, from Capital One, from Avant, Facebook, Google, DocuSign, Tesla, McKinsey, BCG. We take a lot of pride in having a very robust recruiting process that really ultimately leads to a lot of true positives. So our conversion rate at the end of our process is actually very high because we really identify the people that share our values, and controlling for values is the only thing that you control for at scale as we grow, right? We're 21 people now, but next year we're going to be a multiple of that. And 2 years from now, we're going to be even bigger.
Mhm.
So we really have to be disciplined around measuring that, and everything else is a consequence of that. And the team is mainly engineering, um, marketing, finance, operations, risk, but ultimately we're a software company, right? So it's really geared around how do we build software, and our organization also is structured accordingly. But I also have an amazing co-founder, Andreas, who is COO, and he has more of a private equity and consulting background. And generally, we complement each other really well. So I'm very grateful for that.
In terms of you mentioned the core values throughout our discussion here. you know, when hiring people, do you get a sense for their passion and caring about the climate? I mean, you could hire
Yeah.
a really great engineer, but if you want a great engineer that cares about the climate, that's a different set or a
Mm.
different person than someone who's just a great engineer. Is that part of the hiring process, is finding those people who care and are passionate about the climate as you guys are?
Yeah, I think there's three levels to that question. The first one is the space is so new that there's actually not a lot of people that have a lot of experience in it. And, myself included, right? It's so nascent that ultimately people only now are switching into climate and formulating a personal thesis around why they want to be part of it. And ultimately that takes time. And then the second step is, well, we actually have very high conversion, particularly because people understand the economic value proposition, first and foremost, but they also understand the positive externality is that you actually do good for the planet, right? You actually do something about climate change. So if we were only an appeal to ethics business or a more generic fintech company, we wouldn't have that conversion because we wouldn't really stand out. But here they can work on something that creates economic value, but also leads to a better, more sustainable future. And then the third level is really around throughout our interview process, we have a very structured framework around how are we trying to identify if somebody actually shares those values. And that's really how we have positioned the entire interview experience and recruiting experience. And we spend a lot of time internally, right? Deliberating on candidates, understanding where they are, why they would or wouldn't share our values. And one of the things that a lot of early stage companies don't do enough, and I would love to spend even more time on recruiting actually, is they under index on that, right? They just want to find people fast. They want to have some, more hands on deck. We straight from the beginning said no bad eggs allowed. The first 20 people, the first 50 people have to be exceptional. And that is really the core, sort of Tenet mafia, if you will, right? That will permeate the rest of our culture and our organization. And really, if we don't do a good job there, then we're not going to succeed, right? At some point, this business is going to be ephemeral. But if we actually stay disciplined, well, we have such a solid foundation that we can build anything on top of that.
I saw that you guys raised some outside capital. How was the fundraising process, and what'd you learn during the process that maybe you could, if another founder picked up the episode, that they find helpful to hear?
Absolutely. So we've raised 18 million in seed funding so far, and that was done in 2 steps. One at the end of last year, and then earlier this year, because we now have different financial partners where it made sense to increase our equity base, right? To effectively be able to originate more loan volume. And the main lesson here that in retrospect, I drew for myself was I should have done a better job reading the macro climate environment. Really at the start of this year, right, things started to turn. And ultimately we succeeded because we had strong track records, executing fast. Climate and sort of ESG is really one of the industries that has so many tailwinds that it's relatively insulated from whatever else is happening. But myself, we could have done even a better job, and that also applies to a lot of other founders if had paid more attention to how does the goalposts shift over time as a function of the macro environment. And ultimately, there was still this 2021 overhang. A lot of people thought, well, all you have to do is grow. And here for us, we found amazing investors. We were able to raise exactly the amount at the terms that we wanted to. But one of the lessons for me was, and we're lucky that wasn't anything that was existential, but it might apply to others, is better reading the writing on the wall in terms of the macro environment and how that trickles down, not just growth stage, but even early stage.
So we have just a few minutes left. I like to end episodes a little bit lighter than we started. Do you have a favorite book or the last book that you read?
Oh, so my favorite book is The Prize by Daniel Yergin. I love that book. He actually won a Pulitzer Prize for it. Currently, I'm reading the biography by Robert Rubin, who used to work at Goldman running their risk arbitrage desk and spawned a whole generation of hedge funds. So that's kind of an interesting read. I generally mostly read nonfiction, admittedly. So it's mainly economic and scientific history.
Uh, every founder, every CEO needs time to step away so they don't get burned out. What do you do to unwind?
I do a lot of sports. I try to be physically active, if that's gym, or I also do a lot of boxing. So sometimes, every once in a while, I come into the office with a black eye or a little bit of a bruise. But I try and time it right so it doesn't overlap with podcasts or other type of events. But it's actually psychologically extremely helpful. Right, one, sort of the metaphor of being able to take a punch, but
Mhm.
also having extreme focus and reactionary speed is certainly something where I drew a couple lessons from for the business world.
That leads into my next question, which is, do you have a favorite sport or sports teams that you root for?
So as a good German boy, I love soccer, obviously, and being from Munich, it's FC Bayern Munich. That's my team. Every time I go back home, I try and catch a game. I grew up having my dad take my brother and I to the games, so I'm a diehard fan.
Favorite vacation spot?
Oh, that's tough. I'm not sure I do. I do try and
Okay.
travel, obviously intermittently, since work, makes life a little bit monodimensional because you're just on the grind, right? You actually want to build something meaningful.
Yep.
One of my favorite spots is Punta del Este in Uruguay, or Santa Teresa in Costa Rica. Really nice atmosphere, a little bit more remote, not too glitzy and bougie, and more sort of down to earth. So, yeah, I really enjoy those two spots.
And then final question, biggest inspiration in life?
Clearly a difficult question. I don't know if I have a single most inspirational person. I think there's obviously a tremendous amount. There's sort of the go-to answers like Elon Musk, obviously super inspirational, or more in the finance world, if that's George Soros or Jim Simmons. On the scientific side, Richard Feynman, extremely inspirational. So it would be difficult for me to give one answer, but there's probably a bunch of idols I have that I don't try and mimic their trajectory, but certainly think about what is things they did that I can learn from, and hopefully, apply to Tenet and help it grow.
Well, Alex, I appreciate you giving me a few minutes and coming on the show. If someone picking up the episode wanted to find you, wanted to find Tenet, how do they do that? How do they get in touch?
Yeah, so we're tenet.com. That's our website. People can find me on Twitter, on LinkedIn. Anything goes. You can shoot me a personal email at alex@tenet.com. I always take customer feedback. That's the most important thing that I can provide. So, yeah, would love for people to reach out. All we want to do is help people really save money by confidently navigating the energy transition. So that's just EVs for now, and more amazing products for the rest of the home coming in the near future.
All right. Well, sounds good. Continued success to you and the team. And hopefully we'll get you back sometime in the future.
Thanks. Amazing having me here. Appreciate your time.
Yep. Thanks so much.